Hi guys, welcome back. Hope you all had some nice time to catch up last week. This is lesson 5, car insurance. We're continuing our unit on cars. Your lesson for Monday, April 13th. So, think about anybody you know that has a vehicle. They have to have vehicle insurance, and what vehicle insurance does, why we have it. It protects you and your car from damage. Or damages. So every car has to have car insurance, and let's say you get into an accident, whether it's your fault or not your fault, car insurance jumps in and protects you from anything that is damaged, whether it may be your car or, for God's sakes, it could be you in the hospital. It helps pay for those bills. So what happens if you don't have vehicle insurance? By federal law, every car must have insurance. Okay, and if you don't have car insurance and you get caught by the police, okay, some of the consequences could be jail time, fines from anywhere from $150 to $1,500. Your license could be revoked for a given time. Impoundment of your vehicle, which means they take your car to the pound. And all dependence on your whether first offense or not, and extent of the incident. So it all depends on how many times you've been caught without car insurance, and what happened. Did you get into a car accident and not have insurance? That's pretty bad. Were you just pulled over by a cop and had no insurance? You'll probably get a ticket. So car insurance, why do we need it? Oops. If anything happens to your car, theft, accident, etc., you need insurance to help cover the costs of repairs or replacement. Helps cover the costs of repairs or replacement. Okay, there are 3 types of insurance that you need. Liability insurance, which covers the cost of bodily injury or property damage. Okay, so usually your liability insurance has a ratio. For this example here, it says your insurance company might offer a bodily injury limits of 25/100, meaning that 25 means they'll pay up to $25,000 for one person injured. So let's say you have to go to the hospital and your bill at the hospital was $15,000. The car insurance will cover that. Let's say your bill, however, you needed a surgery and your bill was $50,000. Well, insurance is only going to cover $25,000 of that, so you'll still have to owe money to the hospital. So then the 100 here represents that they'll pay up to $100,000 if more than one person is injured. So let's say you and a friend were in the car, or you and your wife or your husband were in the car, and both of you got injured. They'll cover $100,000 for multiple people that were injured. Number 2, comprehensive insurance protects from losses due to fire, vandalism, or theft. 3, collision insurance pays to repair your vehicle in case of an accident, and that's whether it's your fault or not. If it is your fault, the police will take a report and determine who is at fault of the accident. If it is your fault, your car insurance that you pay per month will go up because you had an accident. If it wasn't your fault, your car insurance company will go after the other person's car insurance company for the money to fix your car. So at the bottom here, each kind of insurance may have a deductible clause. The deductible is the amount of money you have to pay for any repair. So let's say you have like a $500 deductible, and you get into an accident. The damages to your car from that accident, let's say, were $10,000. You basically need a new car. The deductible, you have to pay $500. That's the deductible. But then the car insurance company will kick in the rest. They'll pay the remainder of that $10,000. So it's, even though deductible paying $500 is a lot better than paying $10,000. So annual base premium. The annual base premium is is basically just the basis of what they're going to charge you per year. Okay, so it's the amount of insurance you want. So it's, the more you pay, the more coverage you get. How old your vehicle is. The older the car, the higher the risk of it breaking down or having an accident, so the more money you pay. And the insurance rating group depends on what kind of car you drive and what kind of safety features your car has. So those are the three factors that determine your annual base premium. Okay, it's just based on numbers, these algorithms that companies use to determine how much you need to pay for to have car insurance every month. So the annual base premium is based on your liability premium plus your comprehensive premium plus the collision premium. Those are the three things that make up your annual base premium. Now, in addition to annual base premium, your annual base premium, you personally, we call yours is just the annual premium. Okay, it's your annual base premium, which we just talked about, times the driver rating factor. Okay, the driver rating factor is specific to you. Okay, this is specific to you. Because the driver rating factor is dependent on things such as your age, your marital status, the amount that you drive. So it's specific to every driver. So your annual premium is going to be the annual base premium, which is the liability plus comprehensive plus collision, times your driver rating factor. Okay, this is the equation we're going to use today. Alright, it's very simple. It looks kind of scary when we're looking at it here, but it's not hard when we look at a couple problems. So number 1. Delta Welch is the principal operator of her vehicle. Her insurance includes $5,100 bodily injury and $50,000 property damage. Her vehicle is in Group A and insurance rating Group 13. She has a $50 deductible comprehensive and $50 deductible collision insurance. So, basically, what we're doing is we're going to use this chart to determine how much is her liability, comprehensive, collision. So, what is her annual base premium? Well, the formula for annual base premium, as we looked, is right here. Okay, it's your liability plus your comprehensive plus collision. So, annual premium equals liability plus comprehensive plus collision times, okay, the driver rating factor. And actually, I'm going to rewrite that so it looks a little bit nicer. I don't want us to get confused. So, annual premium. Okay, so this one is missing a piece here. I'm going to put here, she has a driver rating factor of 2.20. Okay, sorry, there was a typo in this problem. So I'm just going to add in, she has a driver rating factor of 2.20. Okay, I realize we're missing something. So, to find the annual base premium, let's first find the liability. Okay, it says her insurance includes 50, 100 bodily injury. So we're going to be looking in the column right here, 50, 100 bodily injury. Okay, $50,000 worth of property damage, which is right here. So we're meeting in the middle right here. This is what she's going to be charged for her liability. So we have 237.20 plus, now let's find her comprehensive. Okay, her comprehensive. Her vehicle is in Group A and insurance rating Group 13. So Group A, insurance rating Group 13 is going to be right here. $108. And then we do her collision. Her collision is going to be same category, Group A, number 13. So $287.20. Okay, times the driver rating factor, which we have here is 2.20. Okay, and it's as simple as adding up the three numbers. The first thing I want you to do is add up the three numbers. Okay, and if you add them together, you're going to get $632.40. And then we have to still multiply that number by 2.20. So when we multiply that by 2.20, we get $1,391.28. So this is what she's going to pay for the year. Okay, that's the amount of insurance that she's going to pay over the course of a year. Now, in order to budget and plan correctly, we want to know how much are we going to pay per month. So we take that number, right? There's 12 months in a year, and we divide it by 12. When we divide that by 12, we get $115.94 per month. So we have her per year breakdown and we have her per month breakdown. Okay, it's the same formula every time, guys, for the annual premium. Alright, let's try one more. It says, Sean Newton has a driver rating factor of 3.1. His insurance includes 300 bodily injury limits and $100,000 property damage limits. His vehicle is an age group B and insurance rating group 15. He has a $50 deductible comprehensive and $50 deductible collision. So he has comprehensive and he has collision insurance. So we're going to look at our chart first, okay? So his insurance includes 300 bodily injury. So we're looking here in this column, okay, with limits of $100,000 property damage. So that's here. So we're looking here. Okay, that gives us $272.40. So let's write out our, well, we can come back to that, okay? We know we're going to be adding this number in. Second, okay, his vehicle is an age group B and insurance rating group 15. So we're looking in B 15, which is going to give us $128.40. And we're going to do the same thing for the collision deductible. Group B, column 15, is going to be right here. Okay, so now so our annual premium equals liability plus collision times the driver rating factor. Oops, that was totally misspelled. times the driver rating factor. I'm just abbreviating. So liability is going to be right here, okay? $272.40. 272 plus, oops, 0.40. Making a lot of mistakes this morning. Plus the collision, or sorry, comprehensive. Comprehensive is $128.40. Plus collision, okay, $311.20. There's our three factors, and then we times it by the driver rating factor, which is going to be 3.1. So, now that we have our equation, you add up your numbers. When you add up the numbers inside the parentheses, you get $712 times 3.1. So it's 712 times 3.1 gives us $2,207.20 per year. Okay? That's what she pays for the year. Part B, what is the monthly payment? Well, take your total yearly payment and divide by 12. 12 months in a year. And you get $183.90. 93 cents per month. Alright guys, that's it for this lesson. Please try the assignment. It's a problem almost identical to these. You'll see the exact same chart in the assignment, so please don't be afraid to reach out. Have a great day, guys. Bye.